We've gotten above 2 a couple of times. Okay. December. And this right here was intraday up at this level those 2 days. So the yellow line is just a ratio of whatever two symbols I put in there. Does that make sense, Jamesy? So that's all that is. So I look at this every day. So again, the levels are 1 and 1.2. We achieved 1.2 intraday. And now we're looking for things to back off. So that's why when the market rallied off the Fed, we were above the expected move. Back here on the 21st, we talked about the idea of on that day looking to what? Take profits and hedge. And so again, it hasn't been a terrible point to consider taking some profits and hedging, right? We've really been long golden energy mostly the last couple of weeks. There's been some other stuff we've thrown in there. But overall, the market's just been hanging on by a thread. And again, we broke down here, did not close below the low. Then we tried again here, and we did break below the low last Thursday. We bounced back on Friday. We're back in this range again. We're testing the midpoint of the candle. So we'll see where we transition from here. Basically, what we could probably suggest is that, again, generally speaking, the market or institutions are Delta comfortable. What does that mean? They've already hedged, right? So are they comfortable with a sell-off? Absolutely. They're clearly comfortable with the sell-off. Normally, you get these kind of signals. You're looking for a 5 to 10% correction. Is the market okay with the 5 to 10% correction? I would absolutely think the market's okay.